Welcome back to Delta Code. I am Delta, an economist with over 20 years of investment experience, here to help you become financially independent like I have and show you how I invest my money. Today we will continue our coverage of the Dragon portfolio, which is the Magnificent 8 of China. These are the top 8 Chinese tech companies that if you wanted to invest in China and AI in China, I think you should own your portfolio. We started this portfolio this week. Today, I will cover JD.com. In the previous videos, we covered Alibaba, Tencent, and Baidu. I will do a deeper dive on JD. This is the Walmart / Amazon of China. And if the fiscal and monetary stimulus works in China, then the Chinese consumer will spend more money at JD.com. That is the narrative thesis. The Dragon is breathing fire on the Mag 8 of China. To stay up to date with these Chinese tech stocks, the Magnificent 8 Dragon portfolio, as well as US stocks and crypto, make sure to like and subscribe. It really helps out the channel. And make sure to stay to the end for your moment of Zen. Let's jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Let us continue our Dragon portfolio coverage with these 8 Magnificent 8 tech companies in China: Alibaba, Tencent, Baidu, JD, Pinduoduo, Xiaomi, NetEase, and BYD. I've already covered Alibaba, Tencent, and Baidu in depth in the previous videos. Today, I will cover JD.com. We started off with buying just one share. Yesterday, when the market fell 10%, I dollar cost average and I bought a few more shares of each company up to value of $350 to $420. Just randomly buying 3 to 4 more shares when prices were lower by 10% than the day before. Today, the prices are down 1% across the board, some more than others. Looks like NetEase is down 5% and the rest are about 0.5% to 1%. Now, NetEase is my least conviction in this portfolio, honestly, just because of the regulations they have for gaming in China. If anything changes, we can adjust accordingly. So how do you dollar cost average? Well, this is where position sizing and scaling in or dollar cost averaging into your position really matters. If you buy on any one day, that's almost trying to time the market. That's saying it's the cheapest today, I'm going to go all in. And sometimes you could be right. If the stock falls particularly hard on any one day and you cannot make out why, there could be just a large investor selling their position and affecting the market. So if there's no fundamental change to your thesis and the price drops dramatically, sometimes I do double down on my position or buy a lot more than my average predetermined by schedule. So yesterday, when the stocks in this portfolio dropped 10%, what I did was add a lot more than I had in terms of value. Let me show you. So Tencent, I had only one share at 61. When it dropped to 57, I bought 5 more shares, right? So that's 5 times more shares than I already had. Usually what I would do is buy only 1 or 2 more shares on schedule. And as we covered Baidu yesterday, it was about 120 or 117 when we started the portfolio, ended the day, but we got it at 113, as you can see here. So yesterday when it dropped to 106, we picked up 3 more. So we 3x the shares, still bringing the total to about $400 as we're trying to keep equal weight of the portfolio. Now, it doesn't have to be exactly equal because shares cost different amounts, so it's hard to get it to exactly the same price unless you're buying fractional shares, which is something we could do here. But you may also have different conviction in different companies. When it comes to these, obviously, Alibaba, Baidu, and Tencent are my highest conviction, followed by today's company, JD. If we take a look at the Crane Shares ETF I recommended in August, we can see that it's up from 25. It went as high as almost 40 before pulling back to the current 34. This is a healthy pullback, and you're still up a lot from a couple of weeks ago. So it is not end of the world to see a 10% pullback after you see almost 100% gain or 50-60%. Now, let's take a look at Nvidia as an example. It was about $80, then it shot up to $130, pulled back to 100. That's about a 130 to 100. It's almost 30% pullback, and then it went back up to 130, back to 100, and back to 130. So it's common to have these volatile swings when a stock or index or the entire market goes up very quickly. It is healthy to have a retracement because vertical lines straight up are not healthy. Generally, market goes up the stairs and comes down on an elevator. Elevator up is very strange. Now, before we jump into analyzing fundamentals of JD and why it is one of the top buys in the Dragon portfolio, let's take a look at the valuations for forward PE and trailing PE. As you can see right here, it's about 10 on average. Only BYD is at 25, okay? We got 14 for Tencent, 11 for NetEase, 10 for JD, 9 for Baidu, 11 for Alibaba, and 10 for Pinduoduo. Those are really, really cheap forward price to earnings ratios. The price to earnings growth is also around 1, I think, for a lot of these. Right. Anyways, the most expensive one when looking at the PE is BYD at 25, right? But let's look at the US counterpart, which is Tesla, for comparison. The forward PE is 80, right? So Tesla is about 3 times as expensive as BYD. So it may not be the worst buy here. Honestly, from my perspective, the highest risk is NetEase because of the gaming regulations. Now, let us jump into JD.com analysis. JD.com, oh no, it was at 41 today. Now it's at 43. Looks like there's people buying the dip. So looking at the JD chart, we can see that just a few weeks ago, it was, $25. And it's been trading for about 20 to 25 bucks to 30 for over a year since the Chinese market hit its slump. Now, when I recommended the Crane shares, it was also at 25. So you could have bought that, or JD.com, which is Walmart and Amazon kind of rolled into one. So if the Chinese consumer strengthens, then JD.com should do well. It pulled back from 46 down to 43. Maybe we can get it at 40 to dollar cost average. Seems to be there was a resistance here at 40 or 39. Now, I don't look at technical analysis much, but this is very useful right here. This is the Bollinger Band and some technical analysis of moving averages. You can see the 51 is the top of the cloud, 20 is the bottom, about 35 is the middle, and 30. So if you're going to wait for a big pullback, I would probably start buying or set some prices here at 35, where this gap is between 33 and 36. If it does a big pullback, I would expect it to go crab walking here for a little bit. This also happens to be the top from May. But I don't pay much attention to this. This is just voodoo, in my opinion. But when starting a position or when looking to enter, these could be useful indicators because human psychology, a lot of traders look at this and are positioning themselves for this to happen. So manifest destiny sometimes is a thing, and you can get yourself a better discount when starting a position. No need to FOMO in, even at 40. You might be able to get it sub 40, but I am totally okay with starting a position in the low 40s given the valuations here. Single digit, almost 11%, 11 forward PE, trailing PE 15, which is totally reasonable. Valuation of 64 billion. This is the highest it's been in a while. Return on equity 10%. Now the revenue numbers and all this on Yahoo I feel like is not accurate because they're doing it in RMB, not dollars, so it gets confusing. Seeking Alpha is actually a better source to look at data on Chinese companies because I think they do a better conversion to dollars. So let's take a look. We have 150 billion of revenue, where income here is a trillion. So there's some discrepancy, right? Gross profit, 13. That's nice. And net income of 4. So net income 4.2, and it's worth 60 billion. That's reasonable. That is reasonable. Earnings per share, almost 3. And all of these numbers that we get in our fundamental analysis are looking good. Low short float, cash to debt, reasonable, so they have lots of cash. They're doing stock buybacks. If the Chinese continue to stimulate their economy, then JD will be one of the biggest winners, because that is directly affected by the Chinese consumers, sort of like Walmart and Amazon would be in the United States. Looking at the Dragon portfolio being down 1% today, totally valid. I think the Chinese market overall took a 3 or 4% pullback at the start of the day, but now there is some people buying the dip. I would be totally fine with picking up any of these at the current prices. As far as we can tell, the portfolio is still super undervalued, and as I dollar cost average yesterday, I won't do it today because I feel like these are relatively good entry prices. Total change about to 6% loss on almost every one of the companies. So the biggest loss right now is NetEase at 6%. These are relatively low numbers, as the portfolio is only a few days old, and we were starting it at a hype cycle with just one share each. Now we have between 6 shares, and for obviously Xiaomi, that's a $3 stock. We have 100 to get it to $300. Again, this is a very, very small portfolio, about $3,000. During this process, I hope you are learning about the Chinese market, Chinese stocks, how to invest when prices are very volatile, especially to the upside, how to dollar cost average, and how to evaluate stocks. Today, we covered JD. In the last few videos, we did Alibaba, Tencent, and Baidu. Rest of the week or the following days, we'll do these other 4 in depth and keep updating the portfolio, whether it is dollar cost averaging or perhaps adding a company or removing one if anything changes fundamentally. So make sure to like and subscribe to stay updated with everything that's happening with the Dragon portfolio. Thank you for tuning in. As always, may the power of compound interest be with you. And now I give you your moment of Zen.
I make the move now, watching it grow, no slowing. Invested in a dragon, now my wallet's overflowing. They doubted me back then, now they wishing they had shown. Vision is clear, nobody else ever known. Speaking truth to power, this is the hour. Turning cents to dollars, feeling like a scholar. I might just devour, rising like a tower. Trying to simplify it to financial wealth style. Double digits dancing, money on a mission. Winning through persistence, I trust my intuition. Chasing with ambition, never ride passion. This week don't relax, and I'm basking the passion. Mud, sweat, and vision, that's how legends are crafted. I saw the signs while the best just sat back and laughed. That built a portfolio. Now it's on a majestic rise, embodied in wisdom that only time truly defies. From the great wall to skyscrapers kissing the sky. Strategic moves, playing the game inside. Each choice precise, like a chessboard night. While they watch it all, I'm swerving out of sight.
Navigating through markets like a wise old sage. Rise above the noise, turning each new page. Celebrating games with a mind revolution. Any kind, mix up best of regrettics and the solutions. From humble beginnings to thunderous applause. Creating futures, breaking all the flaws. They said it couldn't be done, but look who's made history. Now the charts is going to tell once a mystery. Stay grounded in wisdom, rooted in my truth. China's rise parallel to my own muse. Profit stacking like my digital cards. Gains so high they align with the stars.
Double digits dancing, money on a mission. Winning through persistence, I trust my intuition. Chasing with ambition, never ride passion. This week don't relax, and I'm basking in passion. They said I crashed, but I'm soaring past the ceiling. In this market game, it's more than just a feeling. Strategize steps, vision sharp as a blade. Now my empire's built from the plans that I laid.
Currency shifting in the blink of an eye. While most are guessing I've been aiming high. Out of spade with the sunrise, I count my wins. Investing in progress where the future begins. Reflecting on my journey, the peaks and the troughs. Respect became a key, unwavering, never lost. In the land of dragons, I found my place. Turning dreams into reality in this financial race.